Did you know the average car insurance premium has jumped nearly 20% in just the last year? That's a staggering increase, hitting budgets hard. In this video, we'll break down the surprising perfect storm of inflation, extreme weather, and advanced tech that's driving up your car insurance costs. We'll then show you exactly how to fight back and lower your rates. If you're tired of seeing your premiums climb, hit that subscribe button so you don't miss out on our weekly financial breakdowns. And tell us in the comments, what's your biggest frustration with car insurance right now? Let's start by looking at the big picture. It's not just one thing making your insurance bill higher. Think of it like a perfect storm brewing for your wallet. First, there's inflation. According to the Bureau of Labor Statistics, the cost of vehicle parts and used cars has surged, meaning every repair bill is bigger. Then, we're seeing more extreme weather events. Think floods, hail, and severe storms. These lead to more claims, and insurers pass those costs on. And finally, the technology in our cars is getting incredibly complex. Those fancy sensors and advanced driver assistance systems are expensive to fix or replace, adding another layer to the rising costs. The rising cost of car insurance can feel overwhelming, but there are immediate steps to take control. One of the most impactful actions is to simply shop around. A study by the National Association of Insurance Commissioners, NAIC, found that rates can vary significantly between insurers for the exact same coverage. For instance, a policy that costs $1,200 annually with one provider might be available for $800 with another. Did you know that many insurance companies offer discounts for using telematics devices or apps? These tools monitor driving habits, like braking and acceleration, and can lead to savings of up to 10 to 15% for safe drivers, according to industry estimates. It's like getting a financial reward for good behavior behind the wheel. Furthermore, consider bundling policies. Combining auto insurance with homeowners or renters insurance from the same company can often result in a multi-policy discount, typically saving households between 5% and 15% on their total premiums. This synergy simplifies finances and reduces overall costs. Finally, strategically adjusting deductibles can make a difference. Increasing your deductible, say from $500 to $1,000, can lower your monthly premium. However, it's crucial to ensure the higher deductible is an amount that can be comfortably paid out of pocket in the event of a claim. When considering an electric vehicle, it's crucial to look beyond the initial sticker price and understand the evolving ownership costs. A significant factor is battery degradation, the gradual loss of capacity over time. While most EV batteries are designed to last for many years, their performance does diminish. For instance, a study by Consumer Reports found that the average EV battery could lose around 2.5% of its capacity per year. What happens when that capacity significantly impacts range, or when the battery reaches the end of its useful life? Replacement can be a substantial expense, potentially ranging from $5,000 to $15,000 or more, depending on the vehicle model. This is a factor that many potential EV buyers don't fully account for in their long-term budgeting. Furthermore, specialized maintenance and repair needs for EVs can differ from traditional gasoline-powered cars. While EVs generally have fewer moving parts, the components they do have, particularly the high-voltage battery system and related electronics, require technicians with specific training. This can sometimes translate to higher labor rates at dealerships or specialized repair shops. Are these specialized costs something to be concerned about for the average car owner? It's a valid question, and understanding these unique aspects is key to informed EV ownership. The financial landscape of car ownership has seen a dramatic shift by April 2026, and understanding these changes is key to managing personal budgets effectively. Persistent inflation, for instance, has driven up the cost of vehicle repairs, with the average out-of-pocket expense for collision repairs climbing by an estimated 15% since 2023, according to the National Automobile Dealers Association. This, combined with an increase in claims related to severe weather events, contributes significantly to rising insurance premiums. Did you know that the average cost of a severe weather-related auto insurance claim has increased by over 20% in the last 5 years? Furthermore, the advanced technology in modern vehicles, particularly electric vehicles, EVs, presents its own set of financial considerations. Repairing complex sensor arrays or specialized battery components can be considerably more expensive than traditional auto repairs. This is why optimizing EV finances requires a strategic approach. One of the most impactful strategies for EV owners is managing charging costs by taking advantage of off-peak electricity rates. For example, charging an EV during off-peak hours, typically between midnight and 6 a.m., can reduce electricity costs by as much as 50% compared to peak charging times, a significant saving when considering the average EV owner charges their vehicle 3 to 4 times per week. Understanding the nuances of battery warranties is also crucial. Most manufacturer warranties cover battery degradation for 8 years or 100,000 miles, but it's important to know what specific degradation levels are covered. The cost of owning a vehicle has become a significant concern for many, with auto loan payments representing a substantial portion of monthly budgets. However, there are often avenues to reduce this burden. A key strategy involves revisiting existing auto loan agreements. Consider this. The average interest rate on a new car loan has climbed significantly. For instance, data from early 2024 indicated rates hovering around 7% for new vehicles, a considerable jump from previous years. Refinancing offers a potential pathway to securing a lower annual percentage rate, or APR. This isn't just about a minor adjustment. A full percentage point reduction on a $30,000 loan over 5 years could save hundreds, if not thousands, in interest over the life of the loan. What exactly is refinancing? It's essentially replacing an existing loan with a new one, ideally with more favorable terms. This could translate to a reduced monthly payment, freeing up cash for other financial goals, or a shorter loan term, allowing for quicker debt payoff. Could a simple change in loan terms have such a significant impact on household cash flow? Absolutely. The process typically involves applying for a new loan, often with a different lender, and using the new loan to pay off the old one. This opens the door to potentially better interest rates and more manageable payments, especially if credit scores have improved since the original loan was secured. The cost of simply operating a vehicle has seen a significant uptick, and for many it feels like a constant uphill battle. Consider this. Inflation continues to impact repair costs, with parts and labor seeing substantial increases. For instance, the average cost of a car repair jumped by nearly 10% between 2022 and 2023, according to the National Automobile Dealers Association. This isn't just about individual mechanics, it's a systemic issue affecting the entire industry. Beyond inflation, the frequency and severity of extreme weather events are also playing a major role. More frequent hailstorms, floods, and wildfires lead to a surge in claims, putting pressure on insurance providers. And then there's the technology. Advanced driver assistance systems, while enhancing safety, are incredibly expensive to repair. A single sensor replacement can run into thousands of dollars, a cost that inevitably gets passed along. But what if there were simple, everyday habits that could make a tangible difference? It turns out there are. Think about how a car's aerodynamics are affected by things often overlooked. Carrying roof racks or cargo carriers when not in use can decrease fuel efficiency by as much as 5%, according to the U.S. Department of Energy. That's like leaving a significant amount of money on the table gallon after gallon. It might feel like a sacrifice to spend money on car maintenance when bills are already piling up, but think of it like a doctor's checkup for a person. A little preventative care can head off much bigger problems. For example, regularly changing the oil in a gasoline-powered car, which costs around $50 to $100, can prevent catastrophic engine damage that could cost thousands to fix. Similarly, replacing worn brake pads, typically a few $100s, stops premature rotor damage, saving hundreds more. Did you know that according to AAA, major auto repairs can cost an average of $6,000? This highlights how crucial small, routine checks are. Ignoring a small coolant leak, for instance, could lead to an overheated engine and a repair bill easily exceeding $3,000. What's the real cost of skipping that $20 air filter replacement? It can lead to reduced fuel efficiency, costing more at the pump over time. These proactive steps are investments, not expenses, safeguarding against the shock of unexpected, budget-busting breakdowns. The financial landscape for vehicle owners has undergone a significant transformation by April 2026, with auto insurance premiums, in particular, experiencing a notable surge. This increase is largely driven by persistent inflation, which has driven up the cost of parts and labor for repairs. For instance, the average cost to repair a vehicle after a collision has risen by an estimated 20% in the last 2 years alone, according to industry reports. Compounding this, more frequent and severe weather events are leading to a higher volume of claims, further straining insurance provider resources. Furthermore, the increasing complexity of vehicle technology, including advanced driver assistance systems and sophisticated infotainment, contributes to higher repair bills. These systems often require specialized tools and training to fix, adding to the overall expense. But what can be done to combat these rising costs? Fortunately, several actionable strategies exist to help lower auto insurance premiums. Actively shopping around for quotes from multiple insurers can reveal significant savings, as rates can vary widely. Many providers also offer discounts for using telematics devices, which monitor driving habits, or for bundling auto insurance with other policies, like homeowners insurance. Adjusting deductibles strategically, opting for a higher deductible in exchange for a lower premium, can also provide immediate relief.